Good morning. Welcome to Almus Market Morning. Jayaram here. Almost all the markets gained on the first trading day of 2022, actually with no particular positive trigger. But it's a new year effect when funds always have fresh allocations and they bought stocks. Because increasingly lower concerns about the economic impact of the Omicron virus, though it is spreading exponentially, also helped investor sentiment. European indices closed at their all-time highs as investors favored them as being more reasonably valued. Besides, European Central Bank is still pursuing a dovish monetary policy, and a rate hike by them is far, far away. All the three major indices in US rose closer to all-time highs. Interestingly, Apple's market cap rose about 3 trillion, which is higher than UK's GDP. Actually, looking at the action in the bond market, stocks probably should not have risen. US 2-year yields hit a new high of 0.77, while 10-year hit a high of 1.61, with expectations rising for a rate rise as early as March this year. With reduced worries about Omicron, expectation of oil demand being sustained also helped crude prices, as also risk sentiment improved the gold prices. We also have OPEC meeting yesterday and today, and today they will probably confirm the planned output increase of February. This week, a lot of data coming up. In Europe, there is German retail sales and French CPI, later on Eurozone CPI. And Friday, we have non-farm payrolls of US, which is all very significant. That too coming in the beginning of the year. Confirmation about whether the economy is actually soaring further or not is what will be look forward to. Besides, we have manufacturing indices, manufacturing PMIs from various countries starting today. So higher yields in US helped a dollar rally against major currencies. Higher inflation and higher growth is definitely a positive, which can be a theme for 2022, but it's too early to say. Chinese yuan moved from 6.35 to 6.38 yesterday. In order to ensure yuan's value doesn't act as a brake on Chinese exports, China is likely to adjust the weightings of key yuan index basket in this year. Foreign exchange trading system will increase the greenbacks weighting from 18.9 to 19.88, and for euro from 18.1 to 18.45 as per their basket. And also there is increasing feeling that China will ease further, and I am looking forward to one theme that can be more possibility of becoming reality is Chinese yuan weakness, in my view. On the Indian side, we started off with rupee slightly weak, but came off, rather the dollar came off with the renewed selling, and it's more of technical because we are not breaking 74.50 yet. Till then, market will use the upticks to rally. Sorry, upticks to sell. Also, the trade data from yesterday showed Indian deficits remaining about 21 billion, and average for the last 4 months is well above 20 billion per month, which is far higher than pre-pandemic levels. While the headline says exports have gone, exports have grown tremendously, even the imports have grown to an all-time high of 59.3 in a month, though percentage terms it's lesser than the exports. So this is a medium-term factor that will keep the downside for the dollar rupee limited. Market is more likely to look at flows and short-term factors for the near-term direction of the rupee. But as we are getting entrenched into a larger deficits in trade as well as current account, rupee should be more prone to weakness in the coming months. Thank you.
Thanks, JK. Broadly, the driving factor for all markets yesterday was confidence in US economy, and then the US yield curve shifted higher. There were the two driving factors which put up basically equities at all-time high, and the US yield curve shifted higher. US 2-year yield, which has now touched 0.80%, which is a pandemic high. So now there is a clear indication that US bond yields are coming out of a pandemic zone, and the US 10-year yield closed at 1.64%, which as of now moved higher, but which is discounting a lesser aggressive rate hikes. In risk taking scenario, I already mentioned that US stock made all-time new high on first trading session itself of the year. But we have seen attraction in a dollar yen also, and which has moved higher, and which is at a 1-month high of a 115.80. It seems that in that segment, market is headed towards 1.117 probably. Today morning, Asian currencies are weaker along with the USD index. Korean won is trading near 1-month high of 11.95. So Korean won can be taken a good indication for dollar rupee as well. Gold could not sustain its year-end rally, dipped back to $1,800 again on a higher yields. Gold has again entered into a very strong support area, which is 1790 to 1800. I think this area should hold for a move higher. Cryptocurrencies are trading lower. Bitcoin is dealing at $46,000 per unit. In Indian GSET market has not changed much. It's trading at 646. But looking at the breakout in US yields, it looks like there is a floor of 640.42 on a 10-year yield for a couple of months. Not couple of months, but couple of trading sessions. And we are headed to above 650. Thank you. Have a great day.